one of the biggest areas of growth in the lending market at the moment and the property market is the self-managed super fund space. SMSF lending is very different to going out and buying your home. And it's very much about a commercial loan type of vehicle. And today I've got a very special guest with me, Mary Odisho, General Manager at Flexdoc. Thanks for joining us.
Thank you for having me.
Mary, I want to today talk about SMSF lending, but I want to approach it at the top from a high level and compare the difference between a commercial loan and a residential loan. And you're very experienced in the commercial space. So can you give us an overview of how commercial loans work compared to residential loans or normal mortgages?
Sure. So residential loans typically have one purpose, purchasing a house, whether that's for owner-occupier or investment. And then from a commercial aspect, they could have, a multiple angle type of purpose. Yep. You could have business funding, cash flow. You could have vehicles. You could have the purchase of an actual commercial asset. And then you might even want to be buying a business. So based on the purpose, the lending then is structured accordingly.
So an SMSF is considered a commercial loan because the borrower is a trust and a company.
Correct.
Right? And because of that, because of the nature of the borrower, they might be buying residential, but it's considered a commercial loan?
Yes. So a lot of the lenders, have moved towards treating all of these as commercial. There were some lenders that were okay with treating a commercial borrower as, a company, treating it as residential if the purpose was residential. There is a litmus test, basically. But now they're all moving towards that commercial space.
Okay, cool. This is very, very important to get right. So even if you are buying a residential property, the nature and the behavior of SMSF loans is very similar to commercial. And in terms of buying in a self-managed super fund now with our commercial loan hat on, what are the things that the lenders look for that's different to what they look for when you go and get an average normal mortgage?
Sure. So not all lenders are open to SMSF.
Very important.
There's very specific lenders that will assist you. It's opening up a bit, so I feel like there's some more lenders coming into the market, and that'll be interesting to see how that goes. But generally, they're looking at the balance of your super fund. Yep. They're looking at the rental income, member contributions. Are you making additional contributions? What can you make extra that's required? And then they're also looking at things like the fund's overall liquidity and compliance and making sure that it can wash its own face and that there's no problems.
Okay, cool. So they're looking at three things. First of all, the size of your savings. So if you've got 20 grand in your super fund and your SMSF, it ain't going to work, right?
Yeah.
But you don't necessarily need the millions. So you need to have enough generally for what kind of deposit? What kind of maximum borrowings are you seeing in the SMSF space?
Typically around the 80%.
80% borrow, 20% deposit?
20% deposit, yep. And then you've also got to factor in things like costs, so stamp duty and all of the other stuff that comes with buying property.
Yep.
Some lenders may go into 90%.
And you mentioned something very important, which is the second element. You mentioned liquidity, right? What does a liquidity buffer mean for someone that isn't familiar with that term?
Good question.
Like in terms of the liquidity buffer of the amount that you need left over, that's what I mean.
Yeah, so essentially you don't want to be using all of it in one hit. You want to have some left over and make sure that there is enough for anything else that you have in that SMSF.
So what you're saying is that just because you can borrow up to 80%, it doesn't mean necessarily you can because you have to have an amount left over.
Absolutely, yeah. So you're not always going to get that what's in there is going to be used up in its entirety and you're going to go to the max like you would normally for, if you're applying for a residential property.
Yeah.
You've got X amount of dollars as a deposit. You've got X amount servicing. You can go to the max.
Yeah.
With an SMSF, there's limitations.
They're like, hang on, just leave a bit more on the side just in case. The third and I think other element that is very important to understand is the contributions. So they want to see how much you've been putting into super.
Yes.
They want to also see that over a period of time and the rental income.
Yes.
Right? So explain to us how that impacts the commercial loan.
From a servicing perspective?
From a servicing perspective.
Yeah. So similar to a normal investment purchase, you're going to have your own income.
Yep.
But in this instance, it's the super contributions, whether they are at the level that you've historically been making, or if you need to increase them to meet the requirements, those options are there. And then you've got rental income, which also acts as additional income or super contribution because it's being paid in. And that gets factored in for servicing as well. So that could mean additional borrowing power.
Now, sometimes you can go and get pre-approved, but if you buy this property or that property, you could end up with a different outcome because they have different rental.
Correct.
Right?
Yeah.
So given your experience in the commercial space, how does the rental income impact serviceability or the type of loan that you can go out and get?
So generally, rental income is shaded, so they're not going to be using 100% of it.
Mm-hmm.
So say, for instance, you're purchasing a property, you've obviously got proposed rental, you're not always buying it with a tenant already in there. You'll have a proposed rental figure that you're able to use. There's valuations that get done to verify that information, and then you obviously have a tenant in there. So depending on, each step of that, the valuation could say one thing, you may get a tenant that has actual different rental income. All of that impacts it differently. You could borrow more or less.
Now, this is a multi-step process.
Yeah.
Right? There's a lot of steps. It's going to take a lot of patience. What's your advice to someone that hasn't done a commercial type loan before going into this in terms of how to plan for it, how to prepare, and how to have that patience that there's going to be a fair bit of work to do, but you're going to get there in the end?
Yeah, I guess if this is something that you're considering or thinking about because, SMSF seems to be a real buzzword at the moment, it's everywhere. Talk to your accountant, talk to your advisor, see if it fits for you and what you're wanting to do. Just because everybody else is doing it doesn't mean it's going to work for you. And, make sure you have a good team of people around you. It's really important that you've got the right advice, you've got the right broker to help you with the lending. And you want somebody in all of those areas that is experienced in SMSF and is going to know where to put the loan basically for you so that it works best for you. Having the right support is key. That's pretty much.
And my last question for you is for someone that's considering buying in an SMSF and they're committed to this and they have those three elements. They've got the contributions, they've got rental income from a property coming in, they have the deposit, they have a bit of money left over on the side. Does it impact their personal mortgages and, are they treated together or are they treated separately as two separate baskets?
So they're ring-fenced.
Yep.
They're treated as separate sections of your life, call it.
Yep.
So similar to having an asset holding entity, which you would see in the commercial space or what's called a special purpose vehicle.
Yep.
An SMSF is similar, or lending in the SMSF and Bear Trust is similar. That's not to say, though, that you don't have to worry about the rest of the stuff that you've got. You've still got to be able to look after that with your own income.
Sure. So if you've got liabilities, you need to be in a position to meet them before you're thinking. But if you have a house paid off or you've got properties outside, you can't necessarily use those to improve your position inside, right?
Correct.
That ring fencing comes in and they're separate.
Yeah.
You need to have all those three elements that you spoke about in order to be in a position to get something done.
Yeah, definitely.
Thank you very much. That gives us a great insight. Any final tips and tricks just generally for people when it comes to lending, whether it's residential or commercial?
I guess don't think that one is easier or harder than the other. Everything is specific to your own situation and it could be different. Just because Joe from the barbecue on Sunday got a 5.4 rate doesn't mean you're going to get the same. Just be, I guess, open and honest with your lender. Don't go changing jobs at the last minute or during the process. And definitely don't go, taking out lots of car loans and personal loans, all the usual stuff.
You actually raised something. I promise this is the last question. Yeah. You raised something about Joe at the barbecue talking about his interest rate. And I've had people come and say, I saw on TV that interest rates are this.
Yeah.
Why is my SMSF rate that?
Yeah.
Again, just the difference between commercial lending, SMSF lending rates and the rate that you see advertised on TV for an owner-occupier.
Yeah, definitely. So commercial, as a general rule of thumb, the pricing or the rate that you're going to get is more leaning towards the risk of the transaction rather than just the security. So you may have the right security, you may have the right amount of deposit, you might have all of that. But if the transaction is riskier, the lender is more likely to apply a higher rate to the application for you. And that's what comes in for SMSF. It's a a niche space. Not all the lenders are open to it. And the ones that are, I guess, are pricing based on the risk that they're taking.
Awesome. Thanks so much.
Cool. No worries.
Thank
Thanks.
you.